Affordability.
Yes.
What do you think is the biggest challenge? What are they telling you is their obstacle?
So a lot of these folks have been very good renters for 20 years plus in some cases. Some of them don't know that they can buy a home because they didn't learn that. No one told them. Some of this behavior, you need to be mentored. So if you had someone at home, mom, dad, someone else, another role model who knew how to manage money, chances are that you are in some way good at managing money. But if you didn't know how that worked, then chances are that you went on to become a renter because maybe you learned at some point that was the case, and no one has told you that you can achieve homeownership. More importantly, no one has told you there are all these programs that can help you achieve homeownership.
Welcome to the Real Estate Show with Pat Lopez, where we talk everything real estate. For this show, I have Abraham Berdau from the Urban League of Philadelphia. Abraham, welcome to the show.
Thank you for having me, Pat. Good afternoon, morning, evening, however, whenever people are watching this video.
There you go. Okay. Well, I want to get into affordability. I want to talk about affordability.
Yes.
But before we get into that, I want to talk about Urban League. What is the Urban League? How do you interact into the real estate, community market? But I do want to thank our sponsors, the Real Estate Symposium 2026, where real estate professionals gather to talk about what they think is going to happen for the year, whether it be appreciation, sale price, or interest rates. The Real Estate Symposium 2026. Okay, so Abraham.
Yes.
Urban League.
What are we?
What are you? What do you do?
Yeah, the Urban League of Greater Philadelphia is a civil rights nonprofit organization that has been around for 108 years. 108 years. So we are an affiliate of the National Urban League that has been around for 111 years. We do a little bit of everything that needs to be done to create social mobility conditions for individuals and families who have been historically under-resourced. And you know that you and I worked by way of our activities through the housing department, but there is an entrepreneurship department. We do youth and education, workforce development, assistance for returning citizens. We do civic engagement. We do a little bit of what needs to be done so people can be members of this, productive members of the society, and have the resources to be productive members of the society. And context of the housing department, our bread and butter are housing counseling and financial literacy. 6 years ago, the Urban League of Philadelphia, now the Urban League of Greater Philadelphia, made a conscious decision to seek other elements that will help us that will assist us bringing more people into home ownership, and that's how we pursued funds to provide down payment, closing cost assistance. We're working on some development stuff that really still works in progress, but we're always looking out for patterns, for information, for anecdotes that can inform these opportunities that we're trying to create for different individuals and families.
So just so I understand 100%, so you'll do a lot of counseling, education, for buyers who want to understand, whether it be helping them with credit, understanding debt to income ratio, just the process of buying, and then you also do the counseling because any closing cost assistance programs require housing counseling. So you'll do the counseling as well to allow people to qualify for this money that's out there. That's we'll get into in a minute.
I don't want to misquote our report. You can go to urbanleaguephilly.org and find a report for the fiscal year that just ended and back in June. But on an average year, the Urban League of Philadelphia will educate 3,500 families, around 3,500. Then we do other stuff for pre-purchase counseling. Every year consistently we've been talking to around 1,500 families, and every year for the past 3 years we've been almost averaging 1,000 families that end up buying a house.
Okay.
Because they came through financial literacy, they received one-on-one counseling, they accessed down payment assistance, or we were involved in some other way with that process.
Okay, so why don't we jump into affordability? But before I do that, if you like this show, please subscribe. Please subscribe. I'm almost at 50,000. Also give a like. That also helps the algorithm. Remember, this show's on YouTube, The Real Estate Show with Pat Lopez. Okay, so affordability.
Yes.
What do you think is the biggest challenge? I mean, you're talking to 3,500 people a year, and you're talking about home ownership, those type of things. So what are they telling you is their obstacle?
Yeah. So a lot of these folks have been very good renters for 20 years plus in some cases. Some of them don't know that they can buy a home because they didn't learn that. No one told them. You need them. Some of these behaviors you need to be mentored about. So if you had someone at home, mom, dad, someone else, another role model who knew how to manage money, chances are that you are in some way good at managing money. But if you didn't know how that worked, then chances are that you went on to become a renter because maybe you learned at some point that was the case, and no one has told you that you can achieve home ownership. And more importantly, no one has told you there are all these programs that can help you achieve home ownership. So down payment and closing cost assistance is very big in our world. We help a lot of these individuals, 1,000 families that we bring into home ownership every year. Probably with all of them, there is some degree of down payment closing cost assistance that they are receiving to complete these transactions. In some cases, those capital stacks can look like $46,000 from 4 or 5 different programs that they receive. And that is because, in addition to being first-time home buyers, some of these families lack generational family wealth, right? They don't have a family member who can give them $10,000, $20,000, $50,000 to go and buy a home, so they are doing it on their own. And again, we recognize that they have been on time. They have been timely with their housing payment. In most cases, they have very good employment histories. They have credit scores, credit that is sufficient, following lender guidelines. And the only obstacle that we're looking at is the down payment closing cost assistance. So that's an easy fix.
Right. So let me ask you this. So you would say, from all the people who you coach, mentor, educate, you would say the down payment to be able to get into a home is the biggest issue?
Absolutely. We're starting to see something else with DTIs and other stuff, but it's a work in progress. As we record this video, we are working on a massive grant application that will have some of that, so more to come on that.
Right.
But most importantly is the funds to go into transactions.
Okay. Well, so just so people know, it doesn't matter where you're at. Every state, or almost every state, has money or a charity or a nonprofit that helps out with this down payment assistance. So there's money out there, and once again, it doesn't matter where you're at. Now, when you're talking about stacking some of these programs, you're saying that you could, in theory, get money from the city, then give money from whether a first front door type of program or the keys program, and you're able to combine some of these together where you'll be anywhere between $5,000 up to $50,000. It depends on your income and all that, right?
Yeah, for whoever is not let's not make this a blanket statement and not the rule, but there have been not isolated cases, several cases where people are able to tap into 1, 2, 3, 4 of these different programs, and they go into these transactions getting. I mean, you mentioned First from Door, that's a $15,000 program. You mentioned Keys to Equity, that's a $50,000 $15,000 program. The city of Philadelphia, $10,000 program. We are also having those conversations with the city. We're part of the on the advisory board for the home initiative. Coming out of the home initiative, you have Philly First, you have the One Philly Mortgage program, you have the Turn the Key program. So we are, as the Urban League, we're having this conversations with existing programs, sourcing additional funds to create other programs that we need to create, and then we are involved in the city and state conversations. That is not even mentioning what you very well know about K-Fit, right? And then what people need to know about these programs is that these funds will be available in function of a formula that involves the money that comes into that house and how many people are in that house.
Right. So, yeah, let's elaborate on that. Just, you'll get a little bit more technical with it, but there are income limits where you want to be a first-time home buyer, but you don't have to be on all these programs. There's income limits. Some of them are first-generation buyer, and so on. So there's these different programs that are out there, but incomes could be as little as maybe $63,000 and as high as $190,000. So the income limits are pretty vast, and a lot of people don't think that saying, "Oh, I make $100,000, I make too much money." Well, no. Maybe not.
You may make too much money for one of the programs. You may make too much, and then also I make $100,000. Well, $100,000 per year. How many people live in your house?
Right.
Because that, depending on how many people live in your, how many people conform your household, you're in a different bracket, right? But you know that there are programs like K-Fit that the income cap is, I don't know, historically almost $140,000 for 1 and 2 person families, 3 or more, $160,000 in Philadelphia. Then let's not forget that this is a state program. So if you're going somewhere else, there are other requirements, right? But before people self-disqualify, and I'm going to say that, do not self-disqualify. Before people self-disqualify, they need to talk to a professional like you, to a housing counselor, where we can tell you, you know what? We can analyze hard data, hard information, and say, yeah, it looks like you make too much money for this program, and we've had those conversations, unfortunately, right? But as we say, it looks like you make too much money for this program, then we pivot, and we're like, but there is this other program that you may consider looking into,
right?
And programs like K-Fit do not have an expiration date. First Front Door, Keys to Equity, those programs are seasonal, so we want people. I just had this conversation as I hosted the first time homebuyer webinar on Saturday. I was like, the lender who was there, they were talking about First Front Door and Keys, and I was like, you know what? Yes, but it's very important. You've seen what has happened historically with those programs. I'm like, it's very important that when the programs are out, you are ready to go. And by the way, make sure that your lender, that your realtor, that your team understands how these programs work.
Right.
Not every loan officer is caught the same way. Not every loan officer knows how to navigate the ins and outs of these programs. Right? They have other sets of skills. But when you are putting 2, 3, 4, 5 different programs together, you need to know how to weave these things in a way that you maximize the resources for your clients. And this is not a commercial for Pat Lopez, but someone like Pat Lopez knows how to do that.
Right. Okay, so affordability number one. You mentioned about debt income ratio.
Yes.
Or I'm sorry, down payment is number one. Now, affordability. One big thing that I hear a lot, and tell me if you're hearing the same thing, would be, hey, I'm pre-approved for a $200,000 or a $250,000 house, but I'm looking in a $300,000 neighborhood. And they get discouraged because what they want, maybe the school district, whatever the case may be, they have to rent to be in that school district because they only qualify for $250,000, not the $300,000. So are you seeing some of that?
We have very honest and direct conversations with our clients as they are going through the housing counseling process. We calculate their monthly income and we talked about what we discussed what we believe might be a good payment from their perspective and a good payment according to what we're seeing on paper. People need to have leveled expectations and have realistic expectations, understanding that Philadelphia is a different market. Philadelphia is not New York, not Boston, not Washington, not California, certainly. In Philadelphia, you can still make a 60, 80, make below 100% of the AMI just to keep it clean and still buy a home, which is not a reality for people in some of the other markets I just mentioned, unless those homes are heavily subsidized, but that's a different conversation. So with that, we have discussed how inventory can become scarce during some times of the year. I say this as we are approaching in 2026, we're recording this in early 2026, we're approaching what we kindly refer to as home buying season.
Right.
You know, a lot of folks use their tax refund as a savings account, and then they're looking at that money to help with the other stuff. You know, the summer is a lot more active, so people will see all sorts of properties that are available for sale during the summer months. Winter, fall tend to be a little bit more quiet. But people in Philadelphia and the surrounding counties, they need to understand that achieving a home in Philadelphia is still a reality for a lot of families whose resources might be limited.
Right.
Which is not true in other markets. Other markets have shifted completely, where you have places like California where the average price of a home is $750,000. So needless to say that they're having different challenges to achieve home ownership. With affordability and the price of the home and the availability of homes, we also need to talk about interest rates. Interest rates, as we are recording this podcast, interest rate, there's a bigger conversation taking place about interest rates. That's all I'm going to say. There's a bigger conversation taking place about interest rates. The average interest rate, as we are recording this podcast, is around 7%. Historically, you and I are aware of the anomaly of the interest rates that were closer to 2-3% back in 2015. Then the pandemic kind of like brought them down again, but those were anomalies. What we're seeing now it's more of the standard. That doesn't mean that it can get lower, right? Again, I'm looking at that. And
let me jump in there real quick with the rate. So you said 7, but 6% is where the rate's at now. But now, if we look at the affordability, which affordability is getting a little bit better.
Yes.
Not much. A little bit better.
A little bit better.
Because last year, in 2025, January of 2025, interest rates were ranging in between 6 3/4 to 7 1/4. So 6 3/4 to 7 1/4.
Yeah.
Right now, January 2026, interest rates are 5 3/4 to 6 1/4, and that depends on credit scores. That depends on down payment. It depends on loan program. If you're doing an FHA loan, a conventional loan. So there's factors of where those interest rates can be. Yeah. It's not one size fits all when it comes to that, but interest rates are about 1% lower than what they were last year, which is helping a little bit on that affordability. And the home appreciation, which really threw everything out of whack, was in 2020, 2021, and 22, and 23, and so on. You know, home appreciation went up 40%.
Yeah.
You know, now, if we look at November of 2024 to November of 2025, appreciation went up 1%.
Yes.
So with that slowing down of appreciation, people making a little bit more money because the increase of income is about 3.5% right now.
Yeah.
Right, and with the interest rates lowering, affordability is getting better. But by no means, don't get twisted out there. By no means is it still something that you can do easily. It's still way out of whack from where it was, prior. Right now we're running around 30% of your income is going towards your mortgage payment nationally on average. If we look at 2019, that number was closer to 20%. So we're still, up there. So that affordability part is tight, but is that what you're like? Are people telling you that, hey, I think I can do it, or when you tell them saying, hey, this $250,000 house, their payment would be around here? Like,
I'm going to tell you how the conversations tend to go with our clients. Some of our clients will come in and they often will repeat something that they might have heard on the news or now in some kind of vertical content app, whether you're talking about TikTok or Instagram, or now I'm not only inviting the mainstream media, but the snake enchanters as well. And they will tell me something, and I'm like, often my response will be, what do you think that means?
Right.
Right, and then that's where the conversation gets interesting, because they're repeating something that they're hearing that sounds like a stressful statement, but it hasn't been contextualized. If I tell you, Pat, I'm going to give you a 5% interest rate without giving you any other context, that means nothing to you. If I tell you your interest rate is going to be 7% without giving you any other context, what house you're buying, what are your property taxes, there are all sorts of different variables, then that will mean nothing. But if I tell you your interest rate could be 7%, 6%, 5%, and your income supports a payment of this amount, or your payment could be this amount, then that's how we land those concepts into realities, that we materialize some of that for our clients. And those are, we're trying to kind of like cancel out some of the noise that is out there. Yes, we are coming of a couple of very stressful years where entry-level homes became more scarce, where people were holding on to those 2%, 3% interest rates, knowing that they couldn't get something like that again. Now you have a big fraction of population that is retiring. Now you have market conditions that are changing. We're starting to see some of that in the city of Philadelphia. Additionally, you have programs like a Turn the Key programs, which is a heavily subsidized program where people can buy new constructions at affordable rates, at affordable prices. You have some workforce home projects, or workforce housing projects out there. So there are different naturally occurring affordable homes. That's a terminology that we're not using, but that happens. So people need to come out of a echo chamber, pull their heads out, and just kind of like pay attention to the other things that are happening. And if they don't know what that means, it is okay to ask.
Right.
It is okay to seek the assistance of a housing counselor, which we provide free services, 100% free. Seek the loan, the services of a loan officer or a realtor, so they can contextualize some of that information.
Okay, so your services, Urban League, is free. So for anybody out there who wants to, go to your website or learn more about, what is that, since you mentioned that?
Yeah. urbanleaguephila.org, urbanleaguephila.org. That's a website where we have all of the beautiful information about the services that the Urban League provides. People can sign up for the first-time home buyers program from there. We're also present on all major social media platforms, including Eventbrite. That's really historically the platform we have used to register for people to sign up for classes and whatnot. And 2026 is going to be a great year. We have a couple of things coming out later this year that are going to be very exciting. I can't talk about things because just, I don't like to give away the secret sauce. But if not through the Urban League, I want to be mindful of other housing counseling agencies that are out there. You know very well that we are one of 20-something organizations that exist in Philadelphia that provide, in most cases, free services.
Right. Okay, so just sort of a recap here. To qualify for down payment assistance, which seems to be the number one, hey, I just can't save enough money to get into a home. Most of these down payment assistance, or all of them, require housing counseling. So that's one of the services. Right. And that's one of the services that you guys do for free. Costs nothing to do that. And at the same time, if you're not ready to buy a house, people can go to you just for the education portion, to saying, hey, this is what your credit looks like. These are some of the things you can do to tweak your credit. Now, you're not credit repair companies. You give advice.
We're not. Thank you. Yeah, thank you.
But you can give advice saying, hey, this is how credit works. Pay your bills on time. Novel idea, right? Pay your bills on time. Your credit should be okay. Things like that you'll help with, and just sort of explain the debt to income ratio.
Strategies.
Yeah,
we share strategies with people. In counseling, it's always 80-20, so that means that people need to do the heavy lifting, and we're going to be supporting them. We're going to be guiding them. Thank you for saying that we're not a credit repair agency. We're not going to be calling your credit issuing entities and be like, hey, you need to fix this. That's not going to happen. But we're going to give you some strategies about we're going to tell you what has worked for some of our clients, and you can decide if that's what you want to do or not. Credit, debt to income, credit along with debt to income ratios are because those two conversations go hand in hand, are some of the most important items that will transpire and come up during the conversations.
Right, and you'll put in perspective, because most of the people, from what you're saying is, they don't realize. They'll say, okay, I want a $300,000 house, but when you turn around and say, okay, this $300,000 house payment is $2,200, and then they turn around and say, $2,200?
That's not what I want to pay.
No, I can only pay $1,700.
And I look at your budget, and more importantly, your budget does not support it.
Right.
Yeah, your budget supports a $1,700 payment.
And that's some of the stuff, that reality explanations of setting proper expectations for it, which is huge, because you don't know what you don't know, right?
And that's the case with a lot of folks. A lot of folks, including myself, at times are afraid of looking at their bank account, or afraid of looking at their credit report. They think that there are going to be all of these things, all of these regulatory items in there. We also see the other side, where people are so confident that things are one way, and then when we retrieve a copy of their credit report, it turns out that we're not near what they thought they were. It can go both ways, but for these things, that some of these items take time. They're going to take time to fix. If you're talking about credit, and there are some items that you need to fix in credit, it's going to be a 3-month, 6-month, 9-month,
or even saving
12-month, bro. Saving money is going to take some time. So you need to know in advance, over the next 12 months, over the next 3 months, over the next 6 months, I need to do X, Y, Z.
How much money do I really need to get into a house?
Yeah.
What's my credit look like? What do I have to do to fix it, or make it perfect right now? Okay. Now, what I will say, because you did allude to this a little bit earlier, that 2026, it's an election year. Affordability is the biggest buzzword with all the politicians, with everybody. So I really think that there's going to be programs like you mentioned, stuff coming down the pike, because politicians, one thing they want to do is get reelected. That to them is the most important thing in the world. Forget about anything else, is getting reelected. So there's stuff out there that the administration's bringing out, whether it's the cities, the states, they're bringing out stuff to help people get into homes, because one of the big triggers out there is the younger millennials are saying, hey, I can't afford to get into a house. I don't have the money. I don't have enough income to afford a house. So I know there's a lot of stuff that are being talked about. Who knows if it's going to come into play or not, but But I really think interest rates, should hold. Nobody has a crystal ball. Nobody knows for certain. But interest rates maybe should hold or maybe drift down a little bit, which can help.
I'm laughing because you say younger millennials, and for the longest time, millennials were at the tip of that conversation. Why are you guys doing or not doing to buy homes? I'm millennial. But now we're talking about Generation Y and Gen Z. Over the past few years, more than once, we've had folks who are younger than 20 years old buying their first home, coming through the program, buying their first home, which always blows my mind. I don't know what you were doing at 20 years old, but what little Pat Lopez was doing when he was 20. I can tell you that I was certainly not thinking about buying a home when I was 20. So to me, it means a lot for our program, for the opportunities that we're creating for some of these families, that someone that young is coming through the program, and they are looking at creating generational wealth. Okay. There are conversations that are being spearheaded at the federal, state, and local level. At the federal level, we know, I'm not going to get in the weeds, but we know that there's stuff about the interest rates. We know that there is some initiative to make homes more affordable. That is like a multi-pronged approach. At the local level, we have the home initiative, which we've been supporting, working on for the past year or so. Now we finally, at the end of last year, at the end of 2025, there was agreement, consensus about the budget for year one. So that's great. They have to issue the bond and the other stuff. And that puts us on a 4-year track.
Right.
4 years that we know of, where there will be, again, programs that I mentioned specifically related to homeownership. Philly First, Turn the Key, the One Philly Mortgage, and then there's a lot of other stuff happening there. There's incentives for developers, there's stuff for renters, whatnot. I mean, it's a huge
big
offer.
thing.
It's a big thing. Our job, my job, your job has sort of more for one of our jobs. I know you wear multiple hats, I wear multiple hats, is bringing people closer to those programs. That has been the biggest challenge, if you ask me. People are hearing about these programs, and there are those who hear about them and think they don't qualify for them. There are those who are not hearing about them, and there are those who hear about them and they think they can qualify for them, but then we need to present some of the other options because of incomes.
Right.
Yeah, so we're also constantly just getting a megaphone and just enhancing some of what is happening with those programs.
Right. And the big thing and the biggest takeaway is these programs are throughout the country. It's just not, one state. All the different states have this. So really look into it. Really, look into the local housing counseling agencies, your local realtor. Ask if you're a first-time home buyer, first-generation buyer, saying, hey, what is out there, to help me move the needle, or just get the education. The education is huge of saying, hey, give me a plan that in 1 year, 2 years, I'm able to buy a house, right?
Yeah, and it starts with the class for us, at least at the Urban League of here in Philadelphia. The point of entrance is a class. On an average year, we complete close to 50 classes, where there are times when we're having 2 or 3 classes simultaneously because I'm online and my team is in North Philly and someone else is in West Philly. I mean, there have been times when we are doing 4 classes at the same time. We also created evergreen content. So now our classes, the content is also available online. For someone who wants to learn about the program, they can go into YouTube, look for we're in Philadelphia, and they will see, actually, you are there. You are there doing the homeownership pays with the lender. You're there. We have a partner for the realtor. We are finishing our Spanish, our sections for Spanish speakers. I mean, there's like a whole offer. There should be. I don't want to say there are no excuses, but if someone wants to buy a home, and someone wants to complete, by way of that, completing one of what is going to be one of the biggest purchases of their lifetime, it is okay to invest 4 hours, 5 hours, 6 hours, 7 hours to get educated about that process.
For free.
For free.
Right.
Yeah, for free. Even
Just time.
you don't want to deal with me live? Go online. Go to our YouTube channel and watch the video that we have with Pat Lopez where we talk about the home buying process from the lender's perspective.
Okay, so once again, if somebody wants to go to that website and
urbanleaguephilly.org. The videos are also on our website, and I think there's a link. There should be a link to our YouTube channel. But again, urbanleaguephilly.org. That's a website. You can get a lot of great information, not only about housing but about other programs, and you can sign up for a program from there. If I may, one of the things that I need to recognize is that the Urban League movement consists of 94 affiliates throughout the country. 25 of us have actual housing departments. Many of my peers offer similar situations. So if you're in other markets, you should think about consulting of what the Urban Leagues offer is in your market.
Perfect. Okay, well, thanks for being on the show. Really appreciate it. Your insight on affordability, because that is the big buzzword for 2026, and it was 2025 beyond. Okay, so be sure to follow the show on Facebook and Instagram, and of course, this is going to be on YouTube, The Real Estate Show with Pat Lopez. I'd like to thank our sponsor, the Philadelphia Real Estate Symposium 2026. Shout out to them. Be sure to check that out as well. All you have to do is Google, and it will pop up everywhere. Once again, Real Estate Show with Pat Lopez. Be sure to check it out, YouTube, and I hope you enjoyed the show, and I'll see you next week.